Based on the data that you track, to what extent can we extrapolate this strong performance at JPMorgan to the rest of the U.S. banking sector?
Yeah, absolutely. It's, JP Morgan's performance is really typical of what we see in the markets at the moment. So the M&A markets in particular, but also the capital markets are absolutely booming. If we look at volumes so far this year, for the first 9 months, we've hit over $4 trillion, which is an all-time record. And it's the 5th consecutive quarter of volumes over $1 trillion. So the M&A markets have absolutely recovered from the dip that we saw last year. So if we think back to last year, M&A markets really fell off a cliff, and then they started recovering throughout the second half of the year, leading into this year, where we've seen tremendous activity. And interestingly, both in terms of the value of the deal, so we're seeing more larger deals than we've ever seen before, entering into what we call mega deal territory, over $5 billion. But what we're also seeing, which is really interesting, is a big increase in the volume of activity, right? So we're seeing more and more M&A transactions that we've seen in a very long time before.
Cornelia, it would seem that the boom in M&A activity is driven, at least in part, by the low interest rate environment. I'm wondering now, as we face the reality of a higher rate environment moving forward, has there already been a rush from corporates to get deals done ahead of this rise in rates, or is there a rush coming? How should we think about the trajectory from here to when the Federal Reserve and others begin to raise rates?
Yeah, that's a great question. And look, what we're seeing is a couple of different factors here. So we've had a really favorable financing environment. So we've had an abundance of cheap capital available, which we've seen in record levels of debt capital markets issuance. So both on the bond side, but also on the loan side to fuel those M&A transactions. What we're also seeing is a big change in sentiment from deal makers, right? So C-suite executives are very comfortable executing M&A transactions in this new normal environment. And also in a low interest rate environment, one of the ways that you can secure growth and that you can secure those returns for your investors is through M&A transactions. So I don't see that slowing down. I think we'll continue to see a pretty heavy increase in M&A activity, particularly in sectors such as technology, energy, and infrastructure going into next year. The interest rate environment, I think, will take quite some time to deteriorate. So fully expect that we'll continue to see record levels going into next year.
Cornelia, if you could do a little comparison for us of the situation in U.S. banks versus Europeans, that would be great, because clearly U.S. bank performance has been extraordinary from a share price perspective and also from an underlying business perspective. The Europeans have lagged when it comes to their share prices, obviously a number of structural reasons for that. But from an investment banking perspective, as we look at this diverging interest rate environment potentially, what does that mean for the outlook for European banks versus U.S.?
Yeah, that's a great question. And there's no doubt that the big American banks continue to dominate the league tables here. And if we look at investment banking fees, so the fees that the banks are being paid for advising corporates in both M&A transactions, but also for acting as book runners and underwriters, it's another record level, right? So we're looking at over $110 billion in fees for this year alone. So there's no doubt that the banks are getting paid here and doing very well. JPMorgan announced an increase of 45% in their banking fees just yesterday. So if we then compare it with the European banks, so the European market has been slightly more challenged, but we have seen a big uptick in activity there as well, and particularly in the UK. So what we've seen in the UK that's really interesting is a very big increase in cross-border activity. So a lot of foreign buyers buying into UK assets and UK companies. And I think we'll continue to see that. So looking at the European banks, I would expect those that are UK-based and focus on that market to do pretty well. The rest of what we typically call continental Europe will do well in pockets, but somewhat more challenged. But still a pretty healthy outlook. European volumes have increased about 60% compared to last year. So definitely a good news story here as well.